One trade today. I'm not sitting here grinding out 10 setups and pretending they all made sense. I saw one good trade and I took it, and I walked away with nearly $3,000 in profit. That's the job. So here's what I was looking at. We've got the 4-hour range marked for the day. High line, low line, done. I'm on the 5-minute chart. Price had been sitting inside the range. Nothing interesting happening as yet. And then it dips below the range low. Candle closes underneath it. Now most people at this point either panic and go short, which is wrong, or they freeze because they don't have a plan. I've got a plan, so I'm just watching for now. Next candle closes back inside the range. That's a long signal, a strong long signal. That's step 2, done. But before I touch the buy button, I'm checking one more thing. I use the MACD, and before anyone starts in the comments, yes, I know everyone has an opinion about indicators.
Indicators are lagging, real traders don't use indicators.
Cool, real traders also pay their bills. So let's move on. Here's how I use the MACD. Before I take a long, I need the MACD to be positive, meaning the MACD line has to be above the 0 line. That's it. I'm just confirming that momentum is on my side before I get it. It filters out a huge chunk of the bad setups. On this trade, the MACD was positive, so that's a green light. Everything lines up, and now we need to talk about the entry. My entry was on the close of the candle that came back inside the range, right here. No guessing. Now here's where this trade was a little bit different. The breakout below the range low was huge, like huge enough that my stop loss would be absolutely massive and way too risky. If I put my stop loss that far away, I either need to size down so small that it barely matters, or the risk will be enormous, none of which is acceptable. So instead of using the absolute low, I looked left on the chart and found the nearest support level, a zone where price had previously respected and bounced. That became my stop loss, tight enough to keep risk manageable, but logical enough to make sense. If price breaks that level, the trade is wrong, simple as that. My take profit is always set at 2R, twice the distance of my stop loss. I don't move it, I don't take half off early because I get nervous. I let the trade do what it's supposed to do. So as you can see, price moved up pretty much immediately after entry, not in a straight line, it never does that, but the direction was clear. It pushed up, tapped the take profit level, and that was that. One trade, one setup, checked every box, range signal, MACD positive, stop at a logical level, target at 2R, almost $3,000 in profit. I didn't look for another trade after that. The session was done for me. Some days you get 2 or 3 setups, some days you get 1. The mistake most traders make is forcing more trades just because the market is still open. The market being open is not a reason to take a trade. Now, most traders have a losing problem, but they think it's a strategy problem. So they go looking for a better strategy with new indicators, new setups, probably even looking at new YouTube videos, and the cycle just repeats itself because the strategy was never the issue. The issue was that they don't have discipline. Taking trades that aren't there, moving their stop losses, sizing up because they're confident and sizing down because they're scared. They let their emotions control their trades. That's what kills accounts. It's hardly ever a bad strategy. So today I used the same strategy I always use. I added one small filter, the MACD, which was positive, and the data behind this told me that it improves the win rate of my setups. So that's why I use it. I adjusted the stop loss because the situation called for it, and that adjustment had a clear, logical reason behind it. Nothing there was emotional, nothing there was a guess. What most traders fail to realize is that a good trade isn't always a trade that makes money. A good trade is one where you follow all the rules. Sometimes good trades lose, sometimes sloppy trades win. But the thing is, over 100 trades, the one thing that matters is whether you had a process and stuck to it, because your trading edge doesn't come from a strategy. The edge is your ability to execute your strategy with discipline.